Okay, remember from our previous video, we're looking for opportunities to sell somewhere up there. Okay, so but however, the way the market moved up, that particular candle there on H4 was super aggressive, and we didn't get any sort of a reversal signal up there. Price just closed above that trend line, which was just a red flag for me. And I'm gonna say this again: make sure that when you take a trade, there is something that is telling you, signaling to you that, hey, go in. Okay, so this of course have to come from your strategies. Me throwing these particular structures doesn't necessarily mean that when price gets there you have to randomly sell. I keep on saying this. I feel like I've said this enough, but I'm gonna say it again. The fact that we've projected this, that at that point we are going to look for opportunities to sell, the keyword is opportunities, and that comes from your system. Opportunities will come from your strategy. So if you don't have any sort of a strategy that you use for entries, obviously you're gonna have some crazy losses in a long run. So make sure that you have a system in place that you use to actually take or rather open trades positions. Okay, so in this case, this thing just closed above, retested, and went up. Okay, and there was a slight pause there, which is actually represented by that doji. Price went up. Last night, I remember when we were having our private class, I said that there are areas where these buyers are going to start pushing from. Okay, and now did I see that? Of course, I was using these dynamic structures. I was looking at dynamic structures from different time frames, and 15 minutes. Obviously, this thing was somewhere up there. It was much higher. By dynamic structure, I'm referring to this moving average, since they move with price. Okay, so for instance, if I was to give you an example of where buyers are now, buyers are waiting somewhere down here. Okay, this is where we know that there is a bunch of buyers. So should price come back there, we're most likely to see an impulsive move nicely to the upside. Of course, price tried to actually come give us a nice correction. That was some nice correction there. For those who took my classes before, they should be able to recognize that. Okay, that's a very, very, very nice. There's actually a strategy based on those particular moves. So however, can see that price rallied up for during this New York session. We've seen that push to the upside. Okay, so what's next? Obviously, we are not comfortable buying up there. This is where buyers are sitting at. Obviously, the higher we go, the higher the chances of us reaching the sell territory. Remember, this thing doesn't have any sort of reference, so we cannot use zones or horizontal support and resistance in this case, because it doesn't have any sort of reference to the upside. However, what you can do is to actually use this particular leg there, one, let's just call that one, let's call this two, and then you check your fib to find your Fibonacci extension above there. These are just calculated levels. Okay, so if we move it like that, you can see where prices, it's currently sitting at 1618. The next level obviously is gonna be slightly higher, which is the 200 level, and then the next level after that will be this one. I know there's 227 somewhere there. Okay, there's 227. So these are projected levels. Remember, we cannot just draw, because NASDAQ have never been to those particular prices before, so there's no reference, structural reference of some sort. But what we can do is we can use projections to actually find these levels. If you look at this, this is a little bit further away, but yes, it's feasible that we could actually reach that 1618. That's the next structural level, where if we can get some nice buys after a mini pullback, we're most likely to reach that 10869. So like I've said, that buyers are actually somewhere in space. By space, I'm referring to this. As we come to 15 minutes, you can see that these buyers are now pushing up. They're moving away from this region that I've highlighted. They're now moving up. So there is a chance of seeing this pullback to retest this new sort of a newly formed trend. We can call it that. It's not yet a nice trend on this particular time frame. The trends that are nicely traceable are on 30 minutes each one, and the daily time frame. Okay, but on this one we don't have any sort of a trend yet, but we're most likely to get that pullback back to this structure, and then that correction, then that's when we can land on that particular zone. However, should these structures be violated, particularly the 30-minute structure right there, if this is violated and we see a crossover, moving average crossover, we're most likely to see price heading down. So as long as price keeps on moving above these particular structures, this is going to act as support. We're going to actually follow that trend to the upside. Okay, but we know that we can start investigating this move somewhere up there to see if we can get a nice correction to retest that structure where buyers are and a possible move to the upside. However, this whole buys can only be invalidated by a breakout of this particular region entirely. So you can see if you have a trend line or you're looking at this dynamic area of support, which is the moving average. Keep in mind, I'm using the 21 exponential moving average together with the 55 exponential moving average. So I'm using this as my dynamic structures. Okay, there's a video that I did on this particular approach. Check it out. It's gonna be able, just scroll down the channel, you will see somewhere it talks about the 21 and the 55 exponential moving average. Okay, so you can see this buyers started accumulating there, and we're most likely to get that impulsive move, a correction, and another impulsive move there. But if this fails, we are definitely going to check out this particular region where buyers are actually riding on. Okay, that dynamic structure. Then that's where now we can start talking about and possible sales. However, if price keeps above those lines, we are looking for nothing but opportunities to buy, but we're buying low. We're buying when price comes down to retest. We're not buying up there where it is. Okay, I hope it makes sense. We're not buying extremely high. We're doing exactly what price was doing. It came down there, went up. So if it continues up, wait for another correction to the upside. However, if price breaks out of this, like I've said, that's when this will stop looking for opportunities to buy, because this structure that we're following on will then be violated. I hope it makes sense. If you have a trend line, of course, you can look at the trend line break to see if it's broken. Obviously, buyers will be taken out, and then we might see a possible mini downtrend or some correction somewhere in space. Because if you go to daily, obviously these guys, the buyers on daily are a little bit behind. Okay, they are a little bit behind, so there is a possibility of seeing a couple of days maybe correction to the downside and then a push again. That's a possibility if we come here, because these buyers are still stuck around this particular highs. Okay, that's another possibility. But the next level obviously is 1086, 10869. That's the next level, the next projected level of resistance. Okay, that's that. So remember how I got this? I used this leg to find that projection to the upside, and now we're breaking outside the 1618, moving just above that. So the next level will be that particular guy right there. Okay, however, like I've said, track what the buyers are doing. So if you're a buyer, obviously wait for price to actually pull back. If you're a seller, wait for this particular region to be actually taken out and the retest. If you can get a retest, just make sure that your retest is deep enough, at least 78%, 78.6 or 88.6, somewhere there. Then you can start tracking things. If you're not aware of what I'm talking about, check the raw videos that I've posted on Telegram. These are not YouTube videos, these are just unedited videos that were like posted on Telegram. Do check that out so that you can have an idea of what I'm talking about. Okay, so if you're a buyer, just ride this particular dynamic area, wait for price to correct and then buy. But if you're a seller, wait until these buyers are removed or broken, or until this dynamic area is broken, and then a correction like that. Because remember what I keep on saying, a trend line break, if we're to get a trend line break here plus a nice retest back to this is actually going to give us a head and shoulder pattern. Okay, it's just a simple formula. At least let's say 70% of the times, trend line break, followed by a retest, you will get a head and shoulder pattern, this, which is a reversal pattern. Okay, so most likely to see that should the trend line be broken and we get a nice retest, as long as price closes there and then pushes up, the overall pushes down, the overall results will just be a head and shoulder pattern. That is very straightforward, nothing hectic, nothing weird. I hope this is helpful. make sure that when you take a position, you have something that is telling you to go in. Otherwise, if we forced this particular position here, if we forced the previous trades, will have seen flames there, will have hit stop losses if we forced. Okay, so the plan was to sell there, but that particular opportunity didn't quite present itself. When price got there, it got there with a lot of buyers. So you can see that buying pressure, it was too much. That is why I said previously that, hey, this particular move there, let me see if I can be able to find that move. This particular move here, remember where price was when I did that analysis, that I'm not comfortable with this particular move here. Price is most likely to correct back up, and then that's when I will look for opportunities if it goes up. Unfortunately, it went up and then kept on pushing to the upside. Okay, so it invalidated that plan. Okay, so that's another thing. So in the case of this one, remember, if you're a buyer, this is what you must ride. If you're a seller, wait for this thing that the buyers are riding to be broken, and then you're good to go to the downside. But if you're a buyer, obviously, you want to see this thing being respected back to the upside. Otherwise, you'll have to apply your strategies. When this thing comes back there, you'll have to look for opportunities based on your strategy and then push back up. But if this is removed, then you'll have to opportunities to sell. Okay, I hope it makes sense. Otherwise, if you have a question, just send me a WhatsApp. There's a link in the description box below. If you like these videos, go ahead and share with your friends, share with your mentors, share with whoever that you would like to share this information with. Remember, we're not here to sell you dreams. We're not here to tell you what you want to hear. This is not an investment advice, but this is purely for educational purposes. Otherwise, don't forget to subscribe. Shop, shop.